Hi, I'm John Fitzgerald and welcome to this week's edition of Team Wealth Builders and Happy New Year. It's a new financial year, so we're at July. A lot happening this year. The big news is the election, of course, which now we have a change of leadership in the Labor Party, and will Labor pose a threat to Liberals? Was going to be a landslide, Liberal, etc., etc. What does it all mean? As Julia Gillard says, it doesn't mean everything and it doesn't mean nothing. It means a little bit, but to me, it doesn't mean much, because after 30 years of being in the business and probably seeing 11 or 12 elections, property keeps on going. Property keeps on going for two reasons. One, population growth. And we have population growth of over 5,000 migrants a week, plus nearly 6,000 new births a week. That's right, 6,000. So we're growing by circa 10,000 people a week. That's what Australia is growing by. We need to live somewhere. That's houses. And the second big news is interest rates. And yes, yesterday the Reserve Bank kept interest rates on hold, which is no surprise. They want to see growth. And that's why they're leaning towards continually decreasing interest rates, because they want to see this activity as the mining boom comes to an end. They're the two drivers, the two real drivers for property, and why I'm seeing the smart money going into property today before the election. That is a lot of our existing clients duplicating, and post-election, this is 1 in 2 people who are waiting to see what's going to happen. Guess what? They're always going to be waiting. So how do we finish the year? Property up in Sydney by 5.6% across the year. And why I use Sydney as the benchmark is Sydney is Australia's most sophisticated and biggest capital, nearly 5 million people. So having that market run by 5.6% in really what would be called a tough market is really solid, and most of that in the last 6 months. We saw the stock market this time last year, or at the end of June 2012, sitting at around 4,000, got itself up to 5,200 and then bumped down to about 4,800. And what's happening is it's actually skipping along. And this isn't unusual, as you see people taking profit, and also another generational shift where those people who were 60, 65, maybe 5-6 years ago when the GFC started, and now saying, you know what, I see the market probably getting back to where I get my money back. I'm wanting to cash in my chips. And they're doing it in stocks. They're also doing it in property as well. I want to finish by saying one interesting point, real interesting point. I've followed auction clearance rates, and auction clearance rates are consistently in excess of 70% in our main capitals for the first 6 months of this year, despite the stock market skipping. Why? Because of interest rates and because of this population growth, but also because of job growth. We have created nearly 200,000 jobs in the first 6 months of this year, and the majority of those in Sydney and Melbourne, nearly 100,000 of those in Sydney and Melbourne. Now that's huge. It really is huge news, and something that we can't belittle, because us in property, we're driven by population, we're driven by interest rates, and interest rates are often a precursor to creating those jobs which are now actually occurring, and price growth. I see things ticking over really well post the election, no matter what the outcome. A major boom, an absolute major boom. Thanks for listening to me.